So welcome traders, I'm Adam Harris, Chief Market Analyst, and we're in October already, so this is for the week commencing Monday the 2nd of October. There's quite a bit that's happened. It does appear as though September has been a historically dire month for equities, and there have been some losers and there has been a clear winner. So what I'm going to be doing this week, highlighting really where the focus is going to be, what I need to be looking out for to signal any changes or continuation of the current market conditions, also talking through right to the end which areas have performed the best this past month and which ones are most likely going to continue to perform that way in the coming week. Will there be anything to keep an eye out just in case any of those conditions are changing? So starting off with the economic calendar. First of all, yes, Monday is going to kick off with some US, so this is UK time, US news, which we'll get out, which is manufacturing PMI, the Fed speaking. Then we're really going to have, and this is one that always catches people in non-Kiwi time zones off guard, anything with a Kiwi pair on it in terms of currencies. The rate statement coming out of the Royal Bank of New Zealand is always going to create big swings. So day traders need to be aware of that. Even end of day traders, swing traders need to be aware of that. We'll also get some non-farm employment figures. And then of course on Thursday, we're going to get unemployment claims coming out of the US, and finishing off with Friday, which is the big one every month, which is going to be non-farm employment change. So really the reason these will be something to watch out for the week and expecting the markets to anticipate some potential disturbances there really is, first of all, because there's a lot of really ridiculously negative media out there. And the market is going to be watching to see if any of that has any ground. So they're going to be looking to see if any of the figures are a surprise, negative surprise, that being the case, and then the markets are likely to panic. And if there aren't any surprises, the market's probably going to then look for the next thing to panic about. Anyway, so let's get into it and have a look at what's going on in the charts. But this gives you a sense of what I really need to be focusing on in this coming week. So starting off with the VIX, you can see we've started to move into a little bit of an uptrend here on the daily. We look at it from a monthly perspective. We started to close up a little bit higher, just showing there's a little bit more volatility in the market. Again, this is not indicative of where we're going to be over the next 6 months. It's just telling us that for a while, we've been sitting, the market's been relatively calm and happy. Now we're starting to head into the final quarter of the year. October, November, December, potential Santa Claus rally. Is that going to be the case? September has been historically pretty much as expected. So just something to be aware of there, but this is not indicative of any danger at this time. And it would be if everything was doom and gloom, as a lot of the media says. So then moving on to the dollar index. So far, the dollar has really been the single best performer over the last 8 weeks even. We can see here that it started to break outside of this range. I'm still not entirely comfortable just at this time in calling it that it's broken free, but it is certainly trying to do that. We'll see how it recovers. It's had such a vast number of sequential weeks to the upside. And so this is really where it's I want to be paying attention to that. At some point, we've got to have a bit of a correction, and I'd love to see a little bit of a retracement down, perhaps to the 104 level. If we move across and have a look at the majors, you can see euro dollar here, series of just 10, 11 weeks to the downside. We've got a little bit of a rejection of that 1.05 level, not enough for it to look as though it's a bullish rejection, but what it could be now is the beginning of a bigger correction. So in other words, what could happen this week? I could be looking for price to potentially come back down, test that level again, reject it again, forming either a slightly lower low with a bit of bullish divergence or a double bottom, and then seeing it start to push its way back up to 106. Remember that there's no way non-farm isn't going to play a part in this. Non-farm is going to be a distinguishing or a driver, a cog in the system here that's going to determine how the next week is going to finish. And how the week runs until that Friday news comes out doesn't mean anything until the close of Friday evening. Why do I say that? I say the run up to non-farm payroll and then the market's subsequent reaction after NFP can be and often are completely two different animals. So what we could find is by Friday night, for example, we could find that the market has become very anti-US dollar, or in other words, the US dollar is tanking, in other words, because it's overpriced. And we could see that all the markets across the board close a lot higher. That is one scenario here. And so this week, it's a little bit difficult to predict. I can say the markets are overextended. I can say it has started to look as though it's trying to push back and trying to push that dollar a little bit further back. But there's no doubt that there's something going on with that US dollar, because we are seeing such a strong dollar. It's had such an unusual, very rare winning streak, and therefore we need to be paying attention to that. So look at sterling. Sterling's been a lot weaker than the euro, and so here you can see even longer period down, big moves down in terms of distances, in terms of pips. You can see it's already come back up, and on Friday it closed as a doji, effectively a bit of a rejection of the highs, and therefore implying that there's a possibility it's going to continue down to 1.2 this week. And that's a possibility, absolutely. It could head down to 1.2, and by Friday it could work its way back up to 1.21, 1.22, producing a very bullish rejection candle. So that's certainly something I'll keep an eye out for. Aussie dollar here, Aussie dollar against the US dollar, you can see has been trying to break higher. It's got bullish divergence here. Of the three that I've looked at so far, the three majors, the Aussie dollar against the US dollar is looking way more bullish. Definitely looks as though it can push back up and is trying to do that. When you look at it from a weekly perspective, you can see it's not really going anywhere. But it's not as weak as sterling or as the euro dollar. Then we look at Kiwi dollars, also managed to actually break to the upside. So this one is now starting to head into at least a weekly retracement and has that potential to head up to 0.6, 0.61, and then we'll have to see how that plays. So that's still got some more room to the upside. I'd like to see that continue. Dollar yen, of course, typically here, bucking the trend, has produced a bullish continuation candle. You can see it's now starting to close above the recent highs. So right now, this is actually hinting at its intentions to just continue. We'll see how that goes. I'll take a quick look at the euro pairs and see if there's anything that detracts from that, anything that signals anything different from that. Okay, so let's run through the yen pairs so that I can kind of talk through them. You can see here we've got euro yen is stuck within a tight range. On the weekly, it's just a mess. It's a very slow, effectively a consolidation. You might even want to call it a little bit of a bull flag, but it's not really attractive in terms of trading opportunities. Pound yen is having a very decent pullback and has produced a slightly bullish spinning top. So therefore, this could hint at a possible change to the upside if we break the high. So I'll be keeping an eye on the highs and lows of the weekly candle. Then we can see Aussie yen makes sense because, of course, here we've got that stronger Aussie dollar pushing back. And from a monthly perspective, it's really battling with that level of resistance. The Bank of Japan have at this time said that they're not really pursuing anything that's going to, any policy changes that's going to impact the flow of where these yen pairs are going. So therefore, I don't expect any intervention at this time. Kiwi yen, Kiwi having been quite strong, you can see it's pushing through. So I think Kiwi yen of the lot is likely to keep trickling to the upside. CAD yen has given a very strong bearish engulfing candle, and I think this is likely to come back and retest this level of support. There could be a continuation candle there as well. Swissy yen, now very much more to the downside. That weekly is the one to watch. You can see there's now some strong resistance. Let me just place this in at that level at 165.65, and you can see price potentially wanting to come back and set back. So this week, when I look at the yen crosses, I would be very cautious with individual pairs where I'd be only looking at those setups in isolation, compared to, say, a year ago where you could trade almost any of the yen pairs to the upside and there was a high probability that it would go in your favor. Right now, I'm picking and choosing a little bit more selective because there's very much independent things at play. Looking here, for example, dollar Swissy, very much overextended, minimal effort correction, testing a level of support, 0.91, and producing a little bit of a bullish candle, but you can see it's also overextended when we look at it from a weekly perspective. So I'd really like to see a bit of a correction this week just to offset some of that buying pressure. Whereas, interesting enough, dollar CAD looks as though it's just getting ready to start moving higher. And so that's interesting if that is now hinting at the fact that if dollar CAD is now finally starting to move higher, is the dollar just warming up? Are we just going to continue to see that dollar climb? So we've got a very bullish candle set up here on the weekly. We've almost got the 50, 20, and 10 almost reordered into bullish formation. We've got massive resistance at 1.3624. We'll see, and the daily here has done that bullish engulfing candle. So that looks very much, to me, it makes a lot of sense. Price might come back and retest 35.24 for support, but I expect it to close a lot higher technically. So let's move on to gold. So gold this week has really very much pushed through this green area where I was looking for price to potentially find support in this area. I'm going to just remove it right now. Again, this is supporting that idea of a stronger dollar. However, it's now without a doubt overextended as well to the downside. So let's just recap where we are right now. We've got an unusually strong dollar. The last time we had something this strong, and in fact, maybe not even in terms of just weeks in succession as this strong, but the closest thing to it was last year when we had the invasion of Ukraine by Russia and we also had inflation kicking off. Now we can see inflation is definitely starting to cool. The Ukrainians are clearly winning the war, absolutely. So Russia's not even necessarily a global threat, not in the way that it was. We now get a lot more clarity on the situation. So where is all this danger coming from? Why are the global markets now starting to look towards a stronger dollar? And actually, one of the simplest reasons simply could be because the US economy is doing very well, and therefore the US dollar is now in demand. Okay, so we'll keep an eye on that. But I like the idea of looking for shorting opportunities, but I'm also going to be looking for retracements and continuations on gold as well as silver. Silver down near a significant level of support here. It's now tapping that 50-period moving average on the monthly, so it might be able to reverse from this area. But what I do want to highlight here on the weekly is a series of lower highs coming back into that level of support, and the continued bearishness and trending lower of the MACD, hinting at that bearish momentum is pretty much in place. Then having a look at natural gas. So natural gas still stuck within this range. When you look at it from a monthly perspective, that just shows you the clarity there as well. It's not really going anywhere. There are no real money-making opportunities there. Then we move on to crude oil. So crude oil is having a really good time, except for the fact that it now does appear to be failing at that $90 level or 91 level. And you can also see there's some clear bearish divergence coming in with price action. So I do think there's a very high probability that this coming week, we're likely to see it retrace at least potentially down to the $85 level, if not further. So it's got some good chance, especially if we break this level. It might test support. You can see we had a bit of a double bottom here during the week. There was a shorter term day trading opportunity to the upside here. It was very clear on both light crude, Brent crude, West Texas as well. So I expect price at the very least to come back down towards 88.32, if not further down towards 85. Brent crude, same thing again, came down, tapped the 382 level, took off, has got that bearish divergence, has got exhaustion coming in here. So that weekly is really where the clue is. And if we break the low of this weekly candle, so let's just get the price on that, 89.60, I would expect price to head down towards 85, even maybe even a little bit further. Okay, let's have a quick look. Anything going on coffee? Coffee is dropping. Okay, so nothing fancy there. Wheat, big drop to the downside there. Also dropping. Let's have a look at sugar. So sugar's been climbing a lot. It's battling with that 26.50 level. It's also on the weekly. It's come back into Tesla's level. So this week, I think there's a fair chance it might actually ultimately close as a little bit of a green candle by the end of the week. Again, guys and girls, day traders are going to have to be trading with the one eye on non-farm payroll as we head towards it, and even Thursday potentially with ADP. Just keeping an eye on what's going to happen. On some occasions, ADP produces the biggest move of the week, and it's just reinforced by non-farm payroll, especially if it's a surprise, because it just can steal the thunder. Can happen, doesn't always happen, but can happen. Cotton batting up against resistance. Okay, so we can see those things happening. Now let's move on to the big ones we're watching. So September historically has been never a great month for equities. And we can see that nothing is different. We're now effectively, even though it is only the 30th of September as I record this now, Monday is October, 2nd of October. So we're into October, and we're close to a couple of levels of support, but if we are going to turn around, this is really going to be the month for it. October's kind of got to do that. Okay, so if we do get a strong recovery in October, that really implies that we're probably, most likely, pretty strong running through to December, January, February. We'll see. So we're going to have to play it as it lies. We've got a strong, I shouldn't say that. We have a confirmed downtrend on the weekly. Within the monthly, certainly we have an uptrend, or at least sideways. It isn't in a downtrend here. We've started to dip below that 50-period moving average, but in the past we've done that on the weekly, which is one of the criteria of being in a bull market or bear market is, are you above or below the 50-period moving average? One of the criteria. We are below it right now. Excuse me. Here's the thing. Can we get back over it? And if we go back over in October or in the next couple of weeks, we close back up above it, that could be absolutely fine. Okay, so it's really about if we fail to do that, because in the past, what would happen is price would drop below the 50, couldn't get back above it, and then continues down. And that's really going to be the confirmation of whether we're going back into a bear market. And that's still going to take anywhere from 2 to 6 weeks. So we still have time while we figure out what's going on there. So that's really what my focus this week is this coming week, is to see how we respond to these levels, and especially how we respond by Friday. If Friday we finish really strong to the upside and that dollar is taking a beating across the board, which could happen, it's possible, then we would potentially see that. Now, so what happened in this last week, which I think is noteworthy, is that on the Thursday and a bit of Friday, it did very much look as though the market had kind of reached its fill of the US dollar and wanted to push back a bit. And so a lot of the markets were actually climbing a little bit higher. But then post midday Friday and then right into the wrap up of the weekend, a lot of those markets kind of gave back that ground. So just to point this out again, for example, euro dollar weekly, we were a lot higher than that. We looked a lot more bullish. We came right down here. So this to me is not enough of a rejection. Okay, to me it hints at we're going to see a continuation of a stronger dollar for some part of this week. Maybe not the whole week, but certainly it is, I expect it to be in this part of the week. Same for sterling. And then if we have a look at the Dow, for example, that's not really a rejection of it. Let's look at the S&P. The S&P, that's not a strong enough a rejection. And it was looking really good Friday morning. It's not looking that way. NASDAQ had a beautiful bullish green candle off this trend line. Doesn't really happen, but it is a spinning top or a doji, depending on how retentive you want to be. And so this could be a turning point, certainly for the NASDAQ. It's a very nice retracement on that monthly. This is a great area to produce a bullish candle. Looks really, really good. The S&P as well is a great area for it to find support. So technically in isolation, if I wasn't biased or there wasn't a bias being created by all of the negative media, my expectation here would be that we would have a strong October, and this is it. This would be our first retracement within the new bull market. So, and that's really what we're wanting to know at the moment. I should reiterate though, that it's never optimistic in the beginning of the bull markets. In fact, it's never optimistic for like the first year or two. It's really only when we start to go to brand new all-time highs that the media reluctantly concedes that, wow, we've gone to all-time highs. But until that point, they don't want to do it. So I'm not saying that's definitely the case here. I'm saying that that's how it's been in the past. And so this is no different at this point in time. The market is just, and the media is generally not willing to concede if things are good. They just aren't willing to do it. And there's a lot of media out there that's motivated to spread fear and panic and clickbaity stuff. They get paid for it. They make money doing it. So they're motivated. That's their carrot. There isn't even a stick for them. There's just a carrot to do it. So just be aware of that. That's all. The FTSE, FTSE for as well, let's say it's within a range. I think it's fair to say that, but it certainly is trying to stay above that 50-period moving average. And this is the UK. So the UK's economy is doing better than expected. It's doing better than expected. It's despite the history of it and poor performance over the last 10 years. Right now, the UK's performance is really not that bad. Okay, cool. The DAX, all right, trying to stay above that 50-period moving average within the monthly here. It looks pretty good. Okay, so far they look good. They've got that. We've got the, this is the ASX. Australia is stuck within a range, so there's no doubt that it is in a range here. I should just mark that off. See if we can stay within that. And then we've got the Nikkei. And the Nikkei, has been really bullish. Could find support in this area. Interestingly enough, I'd like to see the Nikkei again come back down to that 30,500 or 30,000 and then recover. So possibly that could be the case with October and November. There might be a bit of a lag. We'll see. In fact, this is where it gets interesting. When we go and have a look at the individual equities, some of them are ready to turn around where they are and some are not quite there. NVIDIA being a good example. So let's do that. Let's move on to the next section. So Apple, beautiful place for this to produce a nice bullish setup to resume the trend to the upside there. Amazon, great place for it to do it at support as well. Same thing, AT&T, battling in this area, but not looking necessarily that bullish, but also potentially could move back down and do a bit of a double or triple bottom off that level. Then we've got ARC also producing another bit of a bullish candle here. So I'm just going to mark that. So you can see it potentially, although it's a downtrend, if we break the high, we could see that and get back above that level of resistance. We could see that. Then we look at Glencore in the UK, which is now at the top of the range. Is still in the range, but looking nice and bullish, and at least at the top of that range. Tesco as well, it's a good place for it to produce a bullish continuation candle over here. So that's what I'll be looking for this coming week, and close to all-time highs. We've got American Express, Amex, not. So that's now falling through. So I highlighted that because I wanted to see if we turn around from that, and that looked pretty good. We never broke the high. So now we're coming back down towards these lows of support here. We'll have to see. Again, that's an area, excuse me, that is an area that I think we can mark over here as well. Boom. So let's see how that goes. Then we've got Amex not looking that great. Berkshire Hathaway. All right, Berkshire Hathaway is beautiful. The weekly, fantastic place for it to now produce a bullish candle. The concern I have is that this very much, a little bit of bearish divergence here. This could turn out to be a double top. Could be. Doesn't necessarily have to be. We could find that price, for example, comes from here to here to here, then there, and then ultimately breaks out. Okay, that's a possible play here. If we build up into a bullish breakout pattern, so we'll see. But that, for the record, I want to mention that is a bit of a concern for me. But also a correction down towards 330 here would also be a nice healthy one. So there's a couple here, as I say, that they hint at, well, we're not quite in the right place, but some of them really are looking like that. Coca-Cola, again, this is a good area for it to find support historically. It can come back down to that 50-period moving average. I'm going to remove this. We don't need this anymore. And this is what I'm going to be looking for to see if we find that. BP, definitely battling with this area, but if they're going to push you, so both BP and Exxon, as long as crude oil is doing well, they're going to continue to push you. And actually, this monthly looks really good. Looks good to continue battling in this area now. But again, I would see if we pull back down and then continue to push through. General Motors is just stuck in this range right near the bottom. There's nothing great about that. I want to see if we fall through that, but just stuck in that place. JP Morgan, also, it's a beautiful place for it to continue up from here. There's a nice little area for it to turn around. Otherwise, not much of a clue there. Then you get, for example, you get Adidas, very nice bullish candle. So they had a great week. This is a good place for them to continue to the upside. So I'll be looking for a break above the high of that. We've got Meta. Just interesting here. Again, I've said it before, I would love for Meta to come down to 245. So this is a good example of one where I would expect it to do a deeper correction. So because remember, I'm constantly looking at the constituents of the indices as well as the indexes themselves. Some, they sort of prop up each other, so that could be the case. For example, if Nvidia did have a big drop to the downside, that would impact the index in the same way that if Apple has a big move, they can impact each other. So that's why I'm just kind of watching them. You've got one eye on those and one eye on the indices and see what happens there. Then we've got Morgan Stanley right near the bottom here, not looking that great, but it is still technically within that range. Nvidia, so again, for me, Nvidia really does need to come back down to this 360, 330 area. I'd need to see it come back down to that. I think it's really, we need to let off some of that thing. But then I look at Netflix, and Netflix is in the perfect spot now to turn around where it is. It should be done. It's let off enough steam. PayPal, dudes, you've got to turn around, man. Spotify, not a lot happening here. Just complete battle happening. There's not much of a clue there. But again, watching the highs and lows. So in this particular case, watching the high here at approximately 168. If we break the high of that, then we're probably on our way back up. And watching the low here, 147, breaking the lows. That's really with it. But in between that, there isn't anything else to do. Back at the bottom of this range over here, a little bit of a bullish candle here. Could be a spinning top, could be a bit of a turnaround point. FedEx, continuing to look bullish to me. There is a level here to watch, but at some point my expectation is we will get through that. We'll see. Again, obviously, if the rest of the market turns bearish, then these ones that are giving mixed signals will likely fall in line with everyone else. Tesla, itchy nose. Tesla producing a bit of a bullish candle. So here a break above the high with signal, it's going to work its way back up, and it's still stuck within that triangle. So it is still trying to decide where its future goes. Okay, it's not bulletproof. Everybody, all empires grow and fail and fall, so we'll have to see how that goes. And then here again, here's another one. So Vanguard, beautiful area. Could come back down a little bit lower if it had to, 382, but there's a good area for it to produce a small, even if it's ultimately by the end of October, the market has gone down a little and then goes back to, finishes somewhere slightly to the upside. Again, that sets everything up, lines it up for November. Walt Disney. So there's some interesting stuff that's worth mentioning here. So I was talking about where Walt Disney is kind of really testing those support levels, looking more and more bearish. But I will say this, it is now starting to produce bullish divergence. Okay, there's enough here that will say, listen, there's bullish divergence here. So this, I'd keep an eye on this. We've got high lows here, lower lows there. We've got a series of that. So it's generally starting to trend higher, which would imply it's starting to slow down. And so we're going to see how this level holds. Okay, a little bit slightly bullish divergent there. Just a hint, not enough to really mean anything. The clues will be if we start to break above this 95. If we get back up above the 95, then we're really starting to, more buyers will come in and start to shift it to the upside. Quickly have a look at 10-year T-notes and Eurobonds. You can see here they're continuing to drop. So the reason I mention this is because right now this implies there's, obviously we've got inverted bond yields, we've got a whole lot of things going on, but it's just basically saying at this point, and this is the most, I think historically the most selling we've ever seen of it, but amongst all the other things that's implied, it's implied that there's not really a demand, there's more of a demand for equities or for other markets, for example, cash markets, than there is for these. So Eurobonds as well, starting to fall off here. Okay, a little bit of a rejection by the end of that, but you can see here this whole area. So keep an eye on that, but because we'll know. You will definitely start to see this start to move higher if we are going to go back into some form of a bear market. Cryptos, very quickly, cryptos have actually performed above expectations. They haven't collapsed like everything else is. You can kind of see here when you look at it from a monthly perspective at the bottom of that range, but that is better than expected. You have Ethereum as well, producing a nice little bit of a bullish candle off that 50-period moving average. Bit of an uptrend on the daily, so there is hope, so to speak, that these will continue to climb. Monthly, nothing really happening with Solana. Cardano is pushing, testing those lows. So they are kind of doing different things. But here you can see it's trying to push higher. It's got bullish divergence. And then finally, Binance, we're just going to see what happens with that. It's just a mess, testing those lows. This one looking the weakest of the bunch. But there we go, ladies and gents. So the biggest winner currently and has been for a while is the US dollar. Now, at some point, I expect at least a weekly retracement. Even if we're going to continue to get that stronger dollar over another year, that's just a hypothetical. I would expect to see, we need to have a retracement. It's ridiculous. It can't just keep going. It becomes a bit of a bubble in its own way. But is there something up? Yeah, there's something up in the markets. Does that mean it's the absolute worst outcome? No, this could be it. This could be it. The markets could recover from here, and it could just have been a historical, moody kind of not a great summer. Everybody's a bit grumpy. It could be any kind of thing. So I don't want to start buying into ridiculous conspiracy theories at this time. Let's see how it plays out 1 week at a time. So on that note, I'm going to let you go. Thank you very much for watching, and I will see you in the next one.